experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to talk about the market action that we saw on Monday in reaction to the pause/trade deal. Let's get into tonight's video. Well, welcome everyone. What a day we had, huh? Over 3% gains across, but all of those gains happened on the announcement. I think it was 3 a.m. in 3 a.m. Eastern time is when they announced it, and I happened to be sitting here live when the markets just exploded, and it basically went up about 2.5%, and then it just continued to grind up 3%. So a couple things, and the title of this video is the NASDAQ in a bull market, which it is not. I will talk about that in a minute. Has it rebounded off the low 20%? Yes, but that's not a bull market. Anyway, and then we're going to talk about whether this was a pause or an actual deal. And we know that it's a pause with a whole lot of strings attached. So let's go through that information first, because I think that's going to be probably the best place to start, since that was the focus of the markets today. So markets reacted to the 90-day pause. The numbers I mentioned in the Substack last night were impressive. I mean, but here's the issue that we always have to deal with is, will China keep up their end? So far, they've never kept up anything, even if you go back when they were admitted to the World Trade Organization, WTO. They've never kept anything up. They're stealing IP. They've never adhered to anything. So I'm not sure why we would expect them to do a lot here, but it certainly makes for a good headline. And I kind of warned you and set you folks up for the potential of what happened to happen. I just thought it would be, 9 a.m., Trump sitting at his desk, that he'd want to do it. But they basically wanted to hijack the market and come in at, 3 hours, 6 hours before the open. And Scott Bessett over and they make this joint statement. And the result is, markets exploded. We basically traded in that range all day. It ended up to be range bound up at this high end level. We're seeing a little bit of selling right now, but nothing material. And a couple other things I have to cover and clean up. I'm always so disappointed. I went through this deep dive on the S&P last night, which was good because the trigger points were there, and then this news just blew right through the trigger points, and we managed to maintain above them, which on the S&P I emphasized a lot was the 200-day moving average, and then really that 58.37 number that was out there, and that was the one that got broken, which then negates the pattern. You can make up reasons. Well, it got broken because of it's broken. So as a technician, you have to honor that value. And so I will go through and do that. Kind of really messes up a lot of the, to a large degree, a lot of the basic outlook that I had as we go down. I still think we're going to stay in part of this. I'm not sure we're going to just continue to rally, but this is what could happen. I'll put this out here, is Trump, they're trying to basically jawbone the market. This is still another jawbone deal. It's a bunch of promises between two parties not to do something for 90 days. I mean, if you think about it, I don't know how old you are who you're watching, but when you get my age, 90 days is like, 3 days. It's not very long. Time passes really quick. And it's going to be interesting to see what happens, because there's some danger in this, just in the fact that we've already seen them, get these deals and then renege and go back. So what do you do after you put out 145% tariff and then you drop it to basically 30 But if you keep the other numbers from the previous deal that was done years ago in 2018, I think it was, some things are 55% because that didn't go away. It's 30 on top, but most of the other stuff is the 30 for China, and they dropped it to 10. But we basically don't do that much business with them, so it's not really relevant from that viewpoint. So, but what happens if this thing blows up? What does that look like? I hate to be a pessimist here, but always got to look at some probabilities here. And if this deal derails, I'm pretty sure that China needs to make it happen just because of the shape their economy is in. Really, really bad shape right now. So from that viewpoint, they probably have to try to adhere more than maybe they've ever had before. And sometimes I talk a lot about this, that timing is everything. And Trump is a master at recognizing a weakness in his opponent and taking him down when it comes to deals. If you've read The Art of the Deal, you know that's actually one of the things you do. You really come at them hard, and then you get them to back off, and then you make a deal. Well, that's exactly what we're seeing here. But the actual outcome is very uncertain because of the type of entities that you're dealing with. It's one thing you're trying to sell a building or real estate. It's another thing when you've got pretty much a rogue government that's sitting there saying they're going to adhere to some rules that you're putting out for them, and that you're going to expect them to follow through with that. So that's going to be the real key, the things to watch. It's going to be abstract, so you're not going to really know until you know. That could be at 3 weeks or 2 weeks or 1 week at the end of the 90 days where somebody says, hey, you didn't do what you said you're going to do. That deal's off now. But what do? You go to 245% tariffs. You just go back to 145. What's the action there? So we'll just have to wait to see for all that. I've been very frustrated, and this is kind of more of the same stuff, just like with the UK deal. Depending on where you're watching, you go to Fox News, they're, oh, this is the greatest deal ever, and it's not even a deal, right? It's a couple pieces of a deal. It's not a completed deal. And this was much more robust, I'd have to say, on the China situation, the best that I could decipher and looking through some of the things that were out there. But still, it's not a deal. And we've got, Trump could come back and just turn the tables again if they don't do the right things. So I still think we got a long ways to go to figure this out, but maybe we don't. I argued that I'm still kind of arguing that we're not going to make an ATH or all-time new high. I'm not sure that's going to happen, even with some of the things that happened. And I'll discuss a couple abstract things that I want to talk about to kind of set up what I want to do on the stream tonight. And, part of that is if you see a market rebound, and I talked about this a number of weeks ago, see a market rebound from 20% or down 21, 27%, I think the NASDAQ was. Now it's rebounded, 20%. We're still off of the highs, and we've got a market that's moved 20% virtually with no correction. So the vulnerability is that this thing stalls. Even though we went above all those numbers I talked about last night, I'll review them again. And we'll talk about the implications from a technical viewpoint and what that means from our analysis. One of the things that, quick little lesson here, one of the things when you're doing TA, you're doing some type of technical analysis and you have your rules in place, you really have to be careful of updating them. And I always tell you that attitudes and opinions keep you in when you should be out and out when you should be in. So you have to be a bit careful. And I'm trying to be careful myself right now because I have a lot of attitudes and opinions about what's going on, not only with the tariffs and the way they're being handled, but the communication is still very sloppy, in my opinion. It's very willy-nilly. ad hoc. It's just like, okay, let's put this out there, see how, I mean, it's really in the end about the market's reaction, or would appear to me that they're looking for. Do they want to do deals? Yeah. Do they want to make things better? Yes. But the reality is, I'm just still very frustrated about the way that we are being messaged to, and the things that are going on, especially those of us market participants. Not that we deserve anything special, but clarity is always a lot better than what we're seeing right now. And even I was watching some of the presser from Scott Bessett last night talking, and he was kind of, I used to be impressed with him, but lately he's just been kind of a bumbling, stumbling, not his delivery has been very awkward to me. I don't know if you folks feel that way, but I have felt like it's been somewhat awkward in different circumstances. So, but when a market rallies 20%, I hate that measurement that now the news media, the least knowledgeable people on the planet, are going, the NASDAQ's in a bull market. So especially the Trump supporters, oh, it's a 20% up, it's a bull market, blah, blah, blah. That's all fine for that. But I'm going to look and show you, this is not what a bull market looks like. We're not in a setup of a bull market. We're not even any phase of a bull market. Not that we can't go higher, but bull markets have, in my opinion, have a different structure than what we're seeing right now. I still think we're ending the last bull market, and I've been arguing that for a while. That what I'm seeing here is we are consolidating and putting a little distribution type patterns into place from the 52.5% gain in the S&P in 23 and 24. We're coming to 25. It's been very sloppy, and we're still negative on the year, and people are wanting to scream stuff. But listen, it's 2025. We've got media. We're sitting here, I'm able to reach out to thousands of people off a broadcast on YouTube, along with, but there's like, I forget how many billions of new videos every day. So it's just a little speck, a little micro view of everything that's going on out here, coming to this channel and doing and talking about these things. The good news is we still have a lot of influence in some money management, so most of the stuff that I talk about here, and since I've come back, has been more portfolio. The technicals on the Substack get a little closer and putting out trade ideas and things of that sort. So that's the best way to go, kendallreport.substack.com. And get that at $8 a month, so it's not a big deal. But it's a way to get the micro out of here from my analysis. But just kind of looking at things from trying to look out at 30,000 feet view, where a lot has not changed. The markets have responded to things, but nothing's really changed. There wasn't that much of an effect on the tariffs that we had so far. We still needed, I've been telling you, another couple quarters to see what the effects of those were, and now they've downsized them. So now you're going to get an average of the number, right? So you'll just see what the effects of everything that we're seeing over the next 3 months. I think you may have lowered the impact on prices as well as on inflationary pressure, maybe down to a couple $300 billion in a multi-trillion-dollar environment from the economy. So I don't think it's material at the moment. It certainly makes good noise. It certainly is a good thing to drive market sentiment from stage to stage, but it's not materially affecting things. I did see, somebody talking about the Trump boom coming on. If he were to get all these deals in place, solidify it so everybody had the confidence that these things that we're seeing are real and going to stay in place, yes, that's a big effect. I've also talked about the whole idea that there's somewhere between 3 and 5, maybe $7 trillion of capital investments laying in the background that basically, from a you'd be like pulling a rabbit out of your hat. You know, you've got something that doesn't exist right now. All of a sudden, you can make it exist. So I think strategic releases of capital investments. I mean, this is going to be, I think, what we're seeing in Trump 2.0. This is how he's going to communicate. This is how he's going to operate. So you never have a real handle on things. Maybe these deals get signed and papered and all that, but that's a big deal to try to get that done. To get a big major trade policy change right now, what we're seeing is just jargon and talk and little side agreements, 30 days here, 90 days. So nothing that's a material policy at this point in time. So you and I, if you're a business person or you work for a business or the larger businesses, none of us still know what we should be doing here. There's talk of tax cuts. There's a bunch of stuff going on. I mean, once again, I end up in this loop every time I go down this trail. Is what we're at is we don't have any answers on anything. There's no answers. There's thoughts, there's ideas, there's concepts, there's goals, but there's no actual things put together that as a business person you can look at, oh, this statute here is in place and this is a regulation and we know we can operate within there. There's an awful lot of stuff here that is not solidified. So I'm still very cautious. Markets today were super impressive to say the least. But it was the whole action for the most part happened in that 3, 4, 5 minutes after release, 3 o'clock a.m. Eastern time. It was around midnight my time when this came out. And, we had a couple other little rolling spikes and it rolled down a little bit, then a spike make a new high. And then, that was pretty much how we traded all day today. And at the end of the day, they actually caught a decent bid. But my point of discussing all this is I don't believe we have anything material, anything that is so that you can count on. And you can sit here and like we went through 23 and 24, for the most part, after coming out of 22 and that decline, everybody's just kind of looking for a recovery. That was a 2-year bull market. That was a 52% gain. Those are big, big numbers. And, I think a lot of people didn't capture that. Most people are lucky if they captured half of those returns. And I know I'm involved in some groups on LinkedIn and some other places that most of the investment advisors were 10 to 15 tops each year. And I think 24, they were lucky they made 10, 12. So most of the so-called, I'm doing air quote, investment community missed out on this thing completely. And now, so this is why it becomes really hard when you miss 2 good years and you come into a year like this where we've been, up a little bit, down 20 plus on the downside. Now we're back, rallying back, and we're still down between 6 and 8%. I forgot to look at the exact numbers, but you folks understand what I'm talking about here. And just for the record, I just noticed a low volume comment, but everything's cranked like always. So might want to check that out. I'm not sure. If anyone else is experiencing that, just let me know. I'm not sure what I'll do, but I just happened to catch that comment. Anyway, as we go forward, we got CPI, PPI coming out. Tomorrow I believe is CPI, then PPI is on Thursday. All the metrics that we have coming out are, I mentioned this and I'll just touch on this, is I don't think there's any surprises in the CPI coming out. I don't see anything there other than, the oil companies are pretty, I don't know, bogus, I'll call them, just because they don't drop. It takes a while to work out the inventory that they bought to the system. At least that's the excuse. I don't think it takes them as long as you think. I think most of the time it should take 2 weeks, but they'll string out any decreases at the pump by at least 2 to 3 months. It'll be, almost the summer will be over, and they'll claim summer demand will keep it up at that level. But we should be seeing much more. Anyway, thanks for the comments on the sound. But the bottom line is we've got a lot of uncertainty yet. So that theme is going to be out there. And I'm anxious. The database should be run when I get done. So we'll do a typical night where we'll go through the WaveTech database, and then we'll go through the indices and talk gold a little bit because it got hit. And one of the things I thought was interesting is that we got this big rally in the stock market, and we watched interest rates go up. I think the 10-year ended up at 10.46. So it's kind of outside that upper bounds. And then there's some, I mentioned yesterday, there's some higher end Fibonacci targets on the upside up to 484, printing 5% potential again. So let's go ahead and get into the database. Let me make sure it's all set up so I can get it set here. All right, let's go ahead and go in. So database at 70.17, roughly we had 450 new buy signals. So we have a little bit of a bias, and we had 340 exits. So it's kind of more of a rotation than anything, nothing material there. I don't remember the exact number. I could look it up on Substack, but I think we're at 70. We just upticked a little bit on this. So let's take a look at some of the sectors. They continue to kind of move along. We've got 10 sectors, 11 sectors. That would mean we got a new buy signal. So healthcare down at the bottom here. You'll see healthcare is a buy. So that's a new buy. We come back up and go to these upward numbers here. And we're going to see right now 11 of the 12 sectors long. So 91%, 80% on groups. So this is no doubt a very robust short-term rally. If we can keep this together, it's Tuesday, so coming into Tuesday, so we've got a long week ahead of us yet. See how this plays together. I suspect that there's some possibility of seeing some what I call rotation, where we started getting about the same amount of buys and sells. That's already starting to happen. And then we might get a little negative where we'll start to see some of these trades peel off. Because if you go back, most of these short-term models hold but around 35 to 50, a range of 35 to 50 trading days, which is basically 6-8 weeks for the most part. Get into 50, you're almost 2.5 months. But most of them is like 2 months, typical strategy. So if you look at where the database started buying, we're getting at that phase. We're going to get the rotation where the early trades will start to peel off, and then maybe the rotation will be some selling of the old trades, some new trades coming in to balance out the percent bullish. But overall, this is really impressive. We've got 10,287 symbols long in the database, only 4374 flat right now. So that's, most I've seen this was after, there was two places, was after the 2008 crash. Actually, when we came into the Lehman crash, we were down around 6% long. and then we started rebuilding from there, but it didn't really build in a big way until around February, March of 2009. And then when we go back just to the pandemic, that was much different scenario. And I always tell you folks that every one of these that we go through is different. So don't look in the rearview mirror and then try to apply what you're seeing, what already happened to what's happening now, and saying it's just like. It's sometimes it resembles, but it's never just like. I could go through a whole show and just go through every collapse in the markets going back to 29 and maybe even before, and every one of them might look similar sometimes on a chart, but they're always for different things, and normally they are even bigger or larger. I would say they look similar, but they're never exact. So there's not a lot of analysis. You're much better looking forward, look out the front windshield, and make sure you're looking for things that could happen. As it stands right now, on that basis, and we're looking at the database, and what I was talking about on the opening comments is what we're really seeing here is really just this very chaotic environment. We did see a lot of the short-term stocks rally. So I know folks are always talking about the Mag 7 and all that. Well, here's 10,287 symbols that they're in trend mode and appreciating. And we can actually go in a database on not on WaveTech, but in Portfolio Expert. I can go in and completely data mine all this data and see what the average returns are on all the stocks that are long, all that kind of stuff. But the issue here is that we've up 20%. We'll use the NASDAQ as a metric, and we've got 70, usually 72, 78%, very, very getting to the point overdone. There's not going to be a lot of new symbols rotate in. So we're getting mature in this rally right when everybody telling you that it's in a bull market. Just like when we were down 21% on the S&P, that was the bottom. Of course, the bottom really was one day that had 11% run. So this I would say of what I've seen right now, this has been a very uncertain, difficult run. Those of you that have a little money and you bought some indexes and you traded successfully, that's awesome. But when you get into managing large blocks of money and those type of things, there's a lot of techniques that go out the window. You can't just do those things. There's too much risk in that. It's great when you get them right. I've done trades, got them right like that. Love it. A lot of fun, exhilarating, all that. But it's different when you start looking at the markets from a little bit further back and start looking at really what type of risk that they're presenting. So the markets are always about probabilities, and that's why this whole math. I know this is an old platform that's been around since 2002. Looks just like it did then. Still looks the same. If you notice in the Substack, I've been working on some new dashboard looks. I'm trying to get this thing refaced. I got several more areas of the software developed for the prototypes and all that. And I'll just mention again on the, I'm going to run the data sheet for the S&P tonight here in just a minute. But I'm very close. Like I said, I have hired somebody. We had more dialogue today, so we're pretty close. We don't think it's going to take a long time to get this data sheets ready to roll out so everybody can use them. So let's go ahead and let's go over to the S&P. It was interesting with this break today when it shot up. We did have just this. I was painting out a scenario last night in the video. Excuse me one second. So I'm drying out a little bit. Just excuse me. Okay, so I was talking about a scenario where we would potentially get a red down arrow over here. This green arrow that you see right here wasn't there last night, and the reason why it's there now is we got this break above that number, that 58.37. So that was this number here. So let me just get this zeroed in. So this number here, 58.37, the high yesterday, 58.76. So we exceeded it by quite a bit. We also got a RTXL signal. And you say, what is that? That is when the market goes outside of this orange line, which is the extreme RTX number. When it does that, we get this, basically it's exceeded the extreme, and the next 1 to 2 days typically will be sideways to down. So we have a little bit of red right now. If you look at the red dots, they're projecting this back to the 10-period moving average. So we're above the 200. We took out that 1237 number. So I'm going to go through, and I have not done this ahead of time. I'm going to do it with you, and we're going to start to set up what we think that what the configuration change is since we've taken out those numbers. If you're around for the beginning of the video today, I was talking about as a technician, when certain numbers and patterns are broken, you can go, well, that happened because of this news or this happened, and you can try to ignore it. But if you're a true technician, you need to adhere to those numbers and honor those numbers and those breaks, and at least ask yourself several questions. Here's another learning lesson here. Several questions on, what, since that's happened, what are some of the probabilities that could come out of this? And that's what we're going to do. I'm going to walk you through that thought process. Okay, so let's take a look at the indicators, which I think is interesting, because right as we get the breakout, everybody's like, yay, we broke out, we broke those numbers that Bob's been talking about, we must be heading up. And I still think, even though we broke, all those numbers did was, I want you to notice here, I just want to blow this up so you can see, those of you who have the indicators, this will be kind of from there. These red dots down here, the Fibonacci projections, I showed you that came from this red up right above me here, this red triangle, and then this top. So we got this green triangle down here and this red top, and we got these Fibonacci projections. Let me just bring up what those are. Those were 5180, 4923, 4723, and I had come up with a number of 48, I think 4830, and I think the low here was 4832. So we came right into that range, and those were projected from there. So what I was talking about last night, I'll draw this in, and then sort of like with Elliott wave, sometimes you'll have a primary wave count, and you'll have an alternate wave count. And the reason why you have that happen is because you may not have all the validations of the primary wave count. It's like, I've got that, but I need this one more thing to happen. Then that's confirmed, and I can carry on the wave count from there. Okay. Someday I'll have to make a video as how, if you know only waves one and two, I can show you how to project out all 5 waves in the future, and they're reasonably accurate way to look at things. I've been thinking I should make an indicator that just forward does that for you. It'd be kind of cool to have. It wouldn't be, since I have most of the algos in place, it wouldn't be that hard to do. So let's go. So what we've done now is we penetrated 5837. Let's start walking together. So one of the scenarios would be, okay, we are entering into a new leg up. And from the viewpoint of this channel, viewpoint of having my tools and my quant database, so you have wave tech, you've got the indicators, all that, you're thinking, okay, I've got a breakout. I'm at 70% bullish on the short term. But what did I just tell you about that? We're actually closer to a peak momentum than we are at the next level. And we're still somewhat short in the pattern. So I'm going to tie this together. We're going to make this go. So probably going to end up, once again, I'll just cover the other symbols, but we're going to dig into this thing. So on the database here real quick, so we have 70%. Over here, there's average days standard deviation. Current duration is at 8, and the typical long is 39 days. Okay, so we go back to this chart here. So what we know is we still have roughly 25, 30 days of forward looking. So what could happen here, this scenario would be just as it's being plotted by the red dot indicator, is you're going to get this to carry in So this is what we got going here. We got this pattern. Like I told you, this green arrow was not there yesterday. If you go watch yesterday's video, it wasn't there. I'm going to take this off. What I was talking about yesterday is getting off of here that we'd get a red dot up here. We still can get the red dot. It just is extending beyond this pattern, which doesn't negate it completely. Let me grab the top of the bar here. So this is what we did today. We broke out over this these highs here, and now we've got the breakout, but we also got an RTX sell, which means we should go sideways. Red dots are forecasting us back to the 10 moving average, so we should probably come back in and then from there we'll be able to tell something else. If we get one of these red dots up here, so if we get if we were to get like a little V here, we get this here, then that would give us the perfect, see, we never got a red dot here, so this has been negated because it's been reset to this being the low. So the algos are going to pick up this. So they're going to go here, and then we'll have to get another pattern down here. And then at this stage, depending on how deep this goes, if we get a green box here, somewhere over here, then that would tell us that would be the moonshot new time highs. And my guess is if that were to happen, it's down the trail into June or July. It could be this a daily chart that all of a sudden you're looking at the potential then at an all-time new high. You know, I think see kind of the crazy reaction. I think Apple was up like 6.5% today, so it's very crazy. But these are the patterns that we're constantly looking at. So right now, from where we are now, is what we got to look at is that we're probably going to be completing this up here. So this is probably going to be an A, B, C pattern. And I've still been arguing for a while. You've been around the channel, you know this, is that what I'm looking at is a potential X wave down, which would bring us probably into this level here. And then we could actually get another, from there, we'd get another A up. I don't know. I'll have to see what the configuration is, but we potentially could stay under there. And then this actually extends down. So we start to get this ABC, XABC consolidation pattern. maybe I've got this wrong from a reverse fundamental standpoint, is that right now with this move up and the break above these numbers may be setting the tone for this last bit not happen, but we could come over here and then this would be the pattern. I still think there's more work to be done here. I think it would be really hard to sustain another 20% rally. So now we're, 30, 40% off the lows. Those typically don't happen, and especially in these short bursts like this. So I think that the scenario that I've kind of been sticking with is just that we're still going to get some kind of configuration here on the, for these bars to just kind of continue in this pattern, and then maybe even come deeper down towards some of these lower levels. Let me just pull this off. Yeah, so what could happen is the X wave gets deeper, then you get a little ABC, and then you get another X, and this just gets to be an absolute mess. Now, one of the things I already saw I turned on the Larry Kudlow show, and he's always, he's big rah guy and all this stuff. But he was saying, that this is bull market's coming and everything's be wonderful. And I'm like, okay, strike one. That's probably not what's going to happen. I still think we've got a ton to deal with in this economy, and from downsizing, seeing government role switch from being the lead employer to secondary. If that's where Trump is taking us, I think longer term that's good. The only reason why we thought the economy was good and the numbers were good is because the previous administration was just pumping government jobs, bringing people over the border, everything they could do, infrastructure deals for trillions of dollars, at pump. They wanted to create the illusion. The Chinese do that pretty well. Chinese now have gotten to the point where they've run that course and they can't go any further. I think we're at the same place from that standpoint, that we've got a lot to deal with. Bob could be wrong about this scenario. The database will tell us more, because right now the 70% bullish has still got a residual of at least 20 to 25 days of a bullish configuration going forward. So no matter what, it's probably buy the dips, buy into some of these elements and all that. So most of what I said last night, originally at some point when I saw these numbers breaking out last night, I go, well, there goes my whole YouTube video last night, because all that stuff got negated. But when you dig in a little deeper, even though it has, unless we get some serious follow through, that's not going to be the case. So let me just continue through here. And what I'll do is I'll just we'll bring up the NASDAQ and we'll go through the whole spectrum, and I'll come back at the end. I'd love to look at some of the comments. Looks like there's some good ones, but it'll distract me from the flow of the stream, and then I'll come back to you. And at the end tonight, I'm going to play I'll play my normal outro song that I play. I've got some other music if you want to hang out for another 6-7 minutes. I've got some other music I'm going to play after that finishes tonight. I don't have it in MP3 form, so we'll have to listen through my mic here. It works out pretty good for right now. All right, so let's go ahead and go to NASDAQ. Patterns are the same. PPMs are the same, but you could argue something here. We got this move up. Everybody's going, oh, NASDAQ's this is one of the things I said I would cover. NASDAQ's in a bull market. And I'm saying, no, it's not in a bull market. Why? So bull markets, let me just go to a weekly chart first, and we'll look just at the bar graph. To get to, in my opinion, to get to a bull market, you'd have to do a configuration like is right here, is that you'd want to see this stair-stepping rally. What I think is happening here, even though this has been an impressive reaction from the declines, it's certainly not the configuration. This is minimum of what I'd expect to see would be, we got this decline. I think this is probably just a B wave, just a retracement, and then you still get all this stuff, even though a couple of the numbers in the pattern, I still think you can see the dots here, which are the projected moving averages. These are looking out, I think, 50 days and 50 bars in the future. But this is really going to be probably right in here is going to be what will end up looking like, and I'm still arguing that we're going to get this stuff over here. It'll be a while before we see the market start to do this again. And that could be 2026. Maybe that's where a boom starts to happen. So let's do this. Let's come out of here and go to a monthly chart. This is even more revealing. If I were going to look at an analogy here of this price, then I would do this. So we look at this area right here, where this red dot is. If anything, I would say we're setting up another pattern like this, where this is kind of the B wave. This is where what I was just talking about is that we've got this move down, and then we just end up operating within this big expansive, I'll take these off here in a second, but these market grid numbers are all going to flow in here. And I've been preaching for the last several weeks about this scenario of normalization before you can make a move. So when you get these big bubble moves here, it just takes, this is a weekly graph. So we're looking at another 4-6 weeks. We're looking at September, July to August, maybe September, to get this in a place where we're ready to make a next directional decision. And I'm not even going to say whether it's going to be up or down. I still have a bit of what I'm looking at. I still see negative potential for the economy going forward. I still see a little bit of a contraction coming. Maybe not necessarily, and like I've been saying, going through Q3, 4, possibly into Q1 of 26. So that is going to be, but these scenarios, you can, I won't argue against this picture I have up on a screen for you, because these things, this normalization happens. It's very odd that something just goes moonshot. Maybe there's some spectacular, I said this last night, and right after I said it, 5 hours later, 6 hours later, they made this announcement in the middle of the night to, that they've got some kind of, they call it a deal. I call it a pause. And so, but these type of patterns, they keep happening. Oftentimes, especially, let me just pull this off for a second. Especially when you look at a bit longer pattern. So this, I'm going to go a little deep here on NASDAQ, okay? I think this is worthy. So we'll probably run out of time for the most part. That's all right. I'll still touch on the other markets, and I'll make sure I cover everything in the Substack tonight. So here we go. So this is when where we get this. We get these patterns. So we're looking now at, we've got this big elongated pattern coming up. Let me get off screen. we got this pattern coming up, and then we start to get into the structure where we hit something here is like A, B, C, and then we get this next rally up, and then we get probably an A, B, C in here, and then we start to get into some of these other patterns where we're starting to move up in this pattern. Where we are now, just in a general from a general formation viewpoint, is this is more likely one of these, and what's even more likely than that is that we're looking at the potential for market. This is the market grid, so that it's going to have to normalize. This is a monthly chart. So now all of a sudden, I'll just draw a line here. This upward arrow is 2027. So we could stay in this consolidation phase. It's fairly broad, and we look at the market grid on this 17, just on the most recent 17,300 to 22,377. So you get a very large range of movement that can happen within the context of the market grid. So you have, when we look at it from that viewpoint, what we're looking at is where the market could go like this. Let me pull a couple off. That the market grid starts to do that normalization, where it starts to gradually kind of move into this pattern. Meanwhile, we trade in this very broad range, this monthly bars, right? So finally, way out here in 2027, 28 is where we actually make a move. So we could go into potentially a year and a half of very broad consolidation, and that this high here might actually be the high up here for a while. Let me just delete this stuff off. So we could get where there's like a peak that we just trade within this stuff here for some period of time. Like I said, I'll just draw this up. This is like roughly on a scale 2028. So you guys get it. It's 52 after. So let's roll here. I want to bring up I'll leave this on monthly for a minute. I've shown you this before, but this monthly chart, there's some crazy projections for the 10-year. The other thing I saw, for what it's worth, when I had Kudlow on, they had former Speaker of the House up, and he was talking about the bull market and how interest rates were going to go down. I don't have anything right now that says interest rates are going to go down. Everything I go through, monthly, weekly, somewhat daily, everything has an upward bias on the back end of the curve. And don't know what that's about at the moment. Don't know if that's liquidation of foreign holdings. I'm going to go there very quickly. We may run over a few minutes tonight because I want to cover this. But we've got this. We see all the positives in the markets in this trade deal, but yet the treasuries go to 443 or 446 it was on a close. So, and then we have projections that are live on a monthly of 536, 601, 642. Now that's got to destroy the U.S. balance sheet if that happens, right? And this could be within the realm of 26, 27 in years, 2026, 27. So we're way out. We're 50,000 feet at the moment. So, but as we come back in, that's what I'm telling you is I don't have anything that isn't suggesting there's brand new upward fib targets. I mentioned them the other day of 509, 555, 584. That's these three dots here. So, meanwhile, if I bring up the the algos, they're kind of neutral. So we're not getting confirmation at the moment, but we could. But this is what I'm saying. I could go through a lot of stuff. I don't see anything telling me interest rates on the back end of the curve are going to drop. They're going to stay. I've been saying this, 395, 440. We printed 446 today. If we get to the next level, there's still that number out there I told you folks weeks ago, which is 472. Break of 472, then these fib targets I just talked about they're real and they're going to happen. Let's go to the Dow. This was an interesting. I covered the Dow the other night, and we are seeing momentum. There's a potential second derivative break here in June. Looks like right at the beginning of June, but all this stuff should be constricted on the Dow. But I thought it was interesting that treasury prices fall, and we got the Dow being bid up. So typically those things are a little more correlated, at least in the last couple of years. That Dow up and the interest rates are going up because that's how they're buying Dows, buying treasuries. So that we didn't see that today. We saw selling treasuries, buying Dows. So maybe, who knows? Maybe they liquidated out and actually bought Dows. Okay, so there's probably a scenario there that works. But so that happened today. We need to keep a close eye on that. So I always depend on you folks on this chat line to remind me of these things that I say, and many times you do. Sometimes not so nicely, but it's okay. So let's. I also brought up crude oil. On a weekly basis, we still have a downtrend, but it's bounced. I think we still see some upward bias around 67. So I don't see oil prices about to plummet or anything. I mean, Trump's hanging around in the Middle East right now. I don't know what kind of deals they're making. He got a new airplane out of the deal, so $400 million airplane. But the scenario that we're seeing here still looks like stable to higher prices on oil. So let's do the last. We'll do Bitcoin, and I'll manage by doing these last. Oh, you know what? We didn't do gold. We need to do gold. So what I've been talking about, let me go over to the daily gold. Now, I am covering gold every day in the newsletter now. So gold got this big, giant reversal up here. See, the algos are stable to negative. These are negative numbers that are here. But we're getting this big, we've had multiple blow-ups of the bubbles or the volatility blow-up. So we're seeing that still happen. We're in a bit of a downtrend now. I think I mentioned last night that if you see a 10-week moving average value, this is the daily. I'll bring that up. That's going to be equal to the 40. So some here, 30, I think I put it out as 3,200, right around those ranges there. That's going to be at least a buy for a bounce here. So far we've had 30, this week we've had 32, 33 low. So another $30 or so. We should see a bounce. I think what we're building here is just this big monster ABC, probably a distribution pattern. And gold's going to have some really hard things to consider, especially if Trump has success in locking down the China deal and some of this other stuff. This is going to be not a great bet, at least for the intermediate. So Bitcoin, basically didn't quite print the challenge all-time new high, but we got we got a bit of a rejection here, which is somewhat concerning because we got up to 105.7. We're back at 102.7. We printed down to 100,760. So this is a bit of a concern. I told you that this could be a historic moment. You're going to see, I know I'm repeating myself every night, but I'm going to say it again. But what you're going to see here is the actions that are being taken by these market makers and options and ETFs and all those guys around. I don't think they're good guys to have around Bitcoin if you want true independence. I think Bitcoin's been compromised substantially. And even though Michael Saylor could come on here and tell you it's not, I think there's some things that potentially are going on here, and I think we're about to find out. And like I've been saying, is the way that we act around this all-time highs, 109, I get the number right now, but I think it's 109. Yeah, 109,350. We'll call it round numbers. If we don't break out and run above this, this could be a big problem to the point of challenging the biggest pivot point of all, which is 71,400. We got down to about 74 and change in that last decline, bounced off there really nicely. But this is the test area and the confirmation for intermediate to longer term outlook for Bitcoin. Obviously, my opinion, but this is a very critical point. So if we get above 109, I actually have some objectives of 121 to 136,000. And if we reject out of this 109 area, then it's going to get much more challenging. And the obvious number is 100,000. So if we start to trade back under there, that would be bad. We already got pretty close to challenging it. What was the, let me just look and see what the range for yesterday was. So range for yesterday, 105,706, 102,760. And then as we came into this new sequence where we printed still the low 102.98. Let me look at something here. Yeah, the low 103, yeah. So 100's the number. I don't like that we got back under 105, so there's some issues going on there. All right, folks, we got through it. Another kind of deep dive. The S&P for me is the one market that I feel like I watch very closely. Yeah, just looking at some of your comments here. They, Yeho, you are right about the market makers. I used to be one. Yeah, gold's chilling out. I'm just looking at some of your comments here, so bear with me and see if there's any. Yeah. Okay. Good comments, everybody. I appreciate everybody showing up. Nothing's triggering me into something I don't feel like was already covered at some level. So I appreciate everybody staying on target and on topic tonight. I always appreciate that. What else? I guess that's it. It's Monday night. We'll be here tomorrow night, Tuesday, and the rest of the week. I'm still working on the figuring out how I'm going to do this whole education. I really want it to be focused on a piece every night. So I've got some stuff. My problem is I kind of run a marathon all the time, so I will get it together here. But as always, thanks for watching. Hit the like button. If you want to hang around, I got a couple more songs maybe I'll play off of my playlist of some of the songs. So We'll talk to you tomorrow night. Okay, folks, I'll come up. We'll see if this plays well enough that you can hear it. So I'll look for some comments here. Let's give it a shot. All right, I had to. I don't know if you folks noticed, but this song is about wave tech and investing with wave tech. It's pretty funny. Anyway, just having fun. I am a bit of a metalhead. What was the quality like coming through the speaker? Because I'm just kind of curious. Good in the 80s. I guess you haven't listened to much industrial German metal. It's funny. Yeah, it does. Yeah, so I'll show you this screen just for fun. And you guys should go here. I'm not getting paid, just so you know. But Suno, it's suno.com. You can make your own music. I have a whole library of music that I've made. I get tired of listening. I have music. I've been playing music for most of my life since I was 12 years old, 11 years old. Drums and then bass, and still play a bit, not a lot, not as much as I would like. But you can go out and create through a prompt, just like with ChatGPT. Excuse me. You can create with the prompt exactly the type of genre you like. So I have a whole playlist library. I had to go down to Phoenix on last Friday, so I was able to just kind of crank up the sound system in the car and just go down and listen to music that, in some cases I created 4 new songs before I left. But anyway, it's really fun to do. I've got like 12 versions of that, and some of them are like really, really good. Anyway, thanks for being part of this community. Somebody made a comment. I love the community. You guys are always very respectful. Once in a while we get a troll in the room, but not very often. Yeah, so thanks for hanging out. Be back tomorrow night. Invest well, be safe, and I will see you then. Have a great evening. Yeah, before I leave, real quick. Sorry, I keep trying to get off here. I will make this. I'm going to make the playlist available, and I'm trying to get it in a format so at least there's a link on Twitter, or maybe I'll put it. I haven't figured out where to put it yet, so that you guys can find it. But anyway, I will put something out. Some of these songs actually came out really good. All right, have a good one.